Dividend aristocrats are the finest long-term dividend stocks and have certain traits. First, its industry leadership ensures constant revenues even in recessions. Next, good dividend stocks have shareholder-friendly management that prioritizes dividend growth. Due to their long-term competitive advantages, they can grow. These 15 dividend aristocrats are S&P 500 stocks that have raised their dividends for 25+ years and share these traits. Here are 15 dividend aristocrats. Number 15. T. Rowe Price Group. One of the biggest publicly traded asset managers is T. Rowe Price Group. For individual and institutional investors, retirement plans, and financial intermediaries, this organization offers a wide selection of mutual funds, sub-advisory services, and separate account administration. For 35 years, T. Rowe Price Group has raised its dividend. It has built its reputation through holding a top spot in the financial services sector. At the end of the first quarter of 2021, the corporation had $1.52 trillion in assets under administration, an increase of 50% from the previous year. Investors have benefited from this as a result of the significant dividend increase. T. Rowe Price Group announced a $1.08 quarterly dividend in February, which is a 20% increase. Currently, shares yield 2.3%. Number 14. Sherwin-Williams. Founded in 1866, Sherwin-Williams is North America's largest paint and coatings producer. Sherwin-Williams sells its products to 120 countries through wholesalers and retail outlets, including more than 5,000 company-owned locations. The company makes Dutch Boy, Pratt & Lambert, Minwax, Thompson's Water Seal, Krylon, and Valspar, which was acquired in 2017. Sherwin-Williams made $18 billion last year. Sherwin-Williams has raised its dividend an astonishing 43 times. The stock's robust dividend growth makes up for its modest current yield of 1%. In February, dividends increased by 23%. Number 13. S&P Global Incorporated. S&P Global is an $80 billion financial services and business information supplier. Due to robust global capital markets, the corporation has had tremendous growth for several years and generates sales above $7 billion. Revenue rose 11% and adjusted earnings per share by 23% in 2020. S&P Global makes half of its operating income from ratings, 30% from market and commodities information, and the rest from S&P Dow Jones indices. As rating service demand rises, this company should keep growing. S&P Global has raised its dividends since 1937. Number 12. Target Corporation. Since 1902, Target has become a leading bargain retailer. This dividend aristocrat has 1,800 outlets with sales above $90 billion. Target has raised its dividend for 40 years. Target stock has reached all-time highs in the past year, yielding 1.3%. As it expands its digital platform, e-commerce growth is significant. Same-day services boosted Target's digital sales by 235% in 2020 to nearly $10 billion. Even as it invests extensively in e-commerce, the company is highly successful and grows earnings per share, allowing it to raise its dividend. Number 11. Aflac Incorporated. Aflac offers supplemental accident, short-term disability, critical illness, dental, vision, and life insurance. Aflac gets 70% of its pre-tax earnings from Japan and 30% from the U.S. The company has grown consistently and it has raised its dividend for 39 years, including 18% in 2020, and its shares yield is 2.4%. As it adds third-sector products popular in Japan, the company may flourish. These include non-traditional goods like cancer insurance, medical, and financial support. Number 10. Walmart Incorporated. Walmart serves 230 million people weekly. Walmart is recession-resistant and it sells more during hard times because of its low prices. The 2020 coronavirus pandemic devastated the U.S. economy, demonstrating this strength. Walmart's constant currency revenue rose 8.6% last year. Walmart spent extensively in its e-commerce platform to compete with Amazon. Walmart's 2020 U.S. e-commerce sales rose 79%, and this dividend aristocrat rewarded its stockholders. 2020 saw a $20 billion share repurchase authorization and a 48th consecutive dividend rise. Number 9. Automatic Data Processing. ADP outsources businesses, and it started with one client in 1949. ADP has been the leading payroll and HR outsourcing provider for over 70 years. It serves 860,000 customers in 140 countries. ADP manages payroll, benefits, and HR for enterprises of all sizes. Companies outsource these duties to focus on their primary company. Thus, this dividend aristocrat sees great demand for these services. Given its strong fundamentals, ADP will likely keep raising its dividend for years. ADP's payout ratio is 55 to 60% of annual earnings. Therefore, it's safe and growing. Number 8. McDonald's Corporation. McDonald's is the largest publicly listed fast food chain with 39,000 stores in over 100 countries. Over 90% of McDonald's franchises are independent. McDonald's profit margins and earnings per share have increased due to increased franchising. McDonald's scale, brand, restaurant network, and real estate holdings provide it with a competitive edge. In recessions, consumers cut dining out spending, thus the company does well. McDonald's dividend has grown due to its recession resistance. Since 1976, McDonald's has raised its dividend annually, and its shares yield 2.3%. Number 7. Lowe's Companies. The Home Depot is number 1 in home improvement, followed by Lowe's. Lowe's has been a dividend aristocrat for nearly 50 years. Lowe's has over 2,200 home improvement and hardware locations in the US and Canada. As the housing market strengthened and the pandemic forced more people to stay home, this dividend aristocrat did well last year. Last year, net sales rose 24% to $89 billion. Lowe's digital platform also drives growth. Lowes.com fourth quarter sales rose 121%. Given the U.S. economy's difficulties, Lowe's dividend increased by 9% last year. Number 6. Roper Technologies. Roper Technologies makes medical and scientific imaging, pumps, and material analysis equipment. Roper Technologies also creates healthcare, transportation, food, energy, and water software. The company has grown rapidly over the previous 5 years. Roper's sales climbed 9% and free cash flow by 13% from 2015 to 2020. Rapid dividend growth has benefited shareholders. Its dividend has risen for 28 years. Over the previous decade, dividends per share have climbed by approximately 24% annually. Number 5. Johnson & Johnson. Johnson & Johnson is the largest U.S. healthcare firm with a $400 billion market cap and $80 billion sales. It dominates pharmaceuticals, medical equipment, and consumer healthcare items with a diversified business style. 28 goods or platforms sell over $1 billion annually for the company. In 2020, this dividend aristocrat generated $20 billion in free cash flow. Naturally, high cash flow allows for the corporation to increase dividends. Johnson & Johnson is among the dividend aristocrats since it has raised its dividend for 59 years. Number 4. Atmos Energy. Atmos Energy distributes and stores natural gas in 8 states and serves over 3 million Texas customers. Its business mix is 2/3 distribution and 1/3 pipeline and storage. Atmos Energy earns 11.5% return on equity in a stable and regulated business. Customers and rate hikes guarantee revenue and earnings growth. The corporation also aims to boost adjusted earnings per share by 6 to 8% annually. Growing dividends benefits shareholders. Atmos has raised dividends for almost 30 years. Number 3. AbbVie Incorporated. ABT spun off AbbVie in 2013. Humira, its main product, will lose U.S. patent protection in 2023. In immunology, hematology, and neurology, AbbVie has much growth potential to replace Humira. The $63 billion Allergan transaction is another trigger. Botox, Allergan's flagship product, diversifies AbbVie's portfolio with worldwide aesthetics. AbbVie's revenue jumped 51% and earnings per share by 22% in the first quarter of 2021. Income investors love AbbVie's stock because of its 4.5% dividend yield. Number 2. Becton, Dickinson & Company. The Becton, Dickinson & Company produces medical supplies. Approximately 40% of its yearly revenue comes from sources outside of the United States, producing annual revenues of over $17 billion. In fact, the business has slowly expanded to become a titan in its sector. As an illustration, this dividend aristocrat produces over 40 billion medical gadgets annually. Furthermore, its position as a leader in the industry results from years of extensive investment in R&D to develop sustainable competitive advantages. The business invests more than $1 billion in R&D every year, and it is paid off because BDC currently owns over 27,000 active patents. For over 50 years, BDC has increased its dividend. At present, it yields 1.4%. Number 1. AT&T Incorporated. Over 100 million households and businesses in the United States receive cellular, cable and satellite TV, and broadband internet services from AT&T, a telecommunications multinational. Due to AT&T's long history of dividend increases and its stock's high dividend yield of more than 6%, income investors find it particularly appealing. The business is making significant investments in growth, like its substantial acquisition of Time Warner. Through this acquisition, AT&T has gained media growth assets, including HBO Max, a streaming service. At the conclusion of the first quarter of 2021, AT&T had approximately 64 million subscribers worldwide and over 44 million domestic HBO and HBO Max subscribers combined. What do you think of our video? Let us know in the comments section below. If you enjoyed this video and want to hear from me again, please subscribe and turn on the notification before leaving. Thanks for watching.